Hello everyone, it's Simple Trade here. Today I want to share with you an interesting story about a trade I made on Robinhood that tells you something about this market. Okay, so this is the SPY, which has been roaring upwards non-stop basically this year. And um, Today is Wednesday, so uh, there are options of SPY expiring today. So I opened a few positions of put credit spread with an upper strike price of 448, and the width of the credit spread is $1. So I opened 11 positions, very small, okay, gained about $11, exactly $11, hoping that the put credit spread will expire worthless and I'll keep this $11. However, sometime in the day, about 55 minutes before market close, Robinhood closed my trade without telling me, forced me to close because it thinks it's risky. Okay, so Robinhood thinks today's stock market is risky enough that there is a good amount of opportunity for the market to crash to my upper strike price, which is well more than 1% crash. Okay, so Robinhood thinks today actually there is a high probability of market crash right around 3 p.m. Eastern time. Okay, this is the time where it closed my trade, forced me to close it, causing me loss because it closed the trade with a with higher price. So I didn't keep the premium. I paid more to force close my positions of put credit spread. That is very bad. So I don't understand why around this time Robinhood thinks the market is going to crash. I think it tells us something. Okay, we can see that this line 452 is right around the support line of today's SPY stock price, and somehow in the afternoon um, an uptrend suddenly broke and everybody is selling. We can see that there are a lot of high volumes, especially this one on the downside. So something triggered this market to sell off in the afternoon, so that when the stock price breaks down this support line, Robinhood thinks it's going to crash. Okay, it's going to crash 1% more to reach my strike price. So it forced me to close my position without telling me. Okay, I think that's how Robinhood think, or at least his risk control algorithm thinks. So it is interesting. I don't blame Robinhood because it's doing its job. I mean, it filled my opening position for these trades much faster than Robinhood or than Webull. So I think if it makes the trade easier for you, it also makes a more strict risk control algorithm running constantly in the backend. Okay, so it tells us that the Robinhood risk control algorithm thinks the market is going to crash today on September 1st, okay, on a Wednesday. Probably because Friday there is a non-farm payroll and a jobless job employment numbers, basically, that are very economic sensitive data that's going to come out on Friday, 2 days later. And I think institutions or um, large stakeholders are going to just, part of them is going to clear part of their positions and just choose to have more cash on the sideline in case the market did crash if the something wrong with the economic data on Friday. So based on these facts, I think, and also the sudden drop towards the close of the market, it triggered the Robinhood's risk control algorithm so that it will force you to close your position, even if it's like 1% above your upper strike price, right? It's very funny that it thinks that during the last 55 minutes, the stock is going to plunge 1% more to this line. I don't know, but I mean, I don't know how Robinhood risk control algorithm runs, but if that what it thinks, it might tell you something. It might be, you know, the market is going to be volatile in September, or if people think that the economic data is not going to look good, or the Fed is going to taper soon, or interest rate is going to rise, or I don't know. It's just interesting. So if you encountered similar stories, feel free to share and leave some comments. Thank you for watching.